Hi everyone, welcome to this month's free market commentary. In this commentary I'm actually going to be doing a follow-up of last week's market commentary to go out to the members in relation to one of the trades that I'm now in, so we'll have a look at that. There's another one that we've been keeping an eye on that didn't quite set up that I think is definitely worth watching because it's at a prime, or it's showing some prime indicators that it could be ready to offer some tradable opportunity, as well as just get a little look on the indices as in the Dow, and we'll have a look at the FTSE as well. So to start off with, we're going to have a look at cable, pound versus dollar, and this one I have been covering. What we've got on this market is you can see that we came back to these highs, and quite a few of us as part of the room, Ali's long this market, I'm also long this market, because when we look at the higher time frames there is definitely some space up to a little above 17,000, but because it's such a psychological round number, we're looking to see if price can get up to there. So what we've had is we've had this breakout after price pushing up here. We can just see price is pushed up, it's pulled back, it's pushed up again, it's pulled back again, and then it's pushed up. It then formed a bit of a consolidation. Now, depending on strategy would depend on when you've get in. Some people get in a little bit before then. I waited for the break of those highs there when I get in, whereas some others get in a little bit before there. Now, what you can also see here is the reason that this has been playing out quite nicely is it's put in a bit of an ascending triangle, which gives it some encouraging indication that the upside is definitely there on the table at the moment. So we'll see what happens with this. Now, just one last point before we move on. The other thing that's really interesting about this is a swing trade. Now, one of the beauties of swing trading is you don't have to be as worried about or spend as much time on news. So if you day trade, you need to know each and every day what news is coming out, because that can create large volatility in the markets. Now, if you look at Friday's candle, you'll notice that it's put in quite a strong reversal type candle. Now, it's not one that you would necessarily trade off of because of where it's at. It's a bit no man's land at this stage. But the fact is, at one point, the sellers pushed this market all the way down, only for potentially a mixture of profit taking versus buyers pushing it all the way back up. Now, you may or may not be aware of this, but we had what's called non-farm payroll in America. So it's basically all the jobs that are created that are not farm related, and that's obviously had an impact on this market. Now, because we were swing trading, we can often sit through these news announcements, and one thing people can get a little concerned about is, but what about the news? How would that affect my trades, etc.? With swing trading, you will notice that news will give spikes, but often it doesn't have a massive impact, which is why often I'm not always familiar or aware of what news is coming out. However, if I was day trading this, so for instance, let's take it just even to a 15-minute chart, you can just see the volatility. We get close to the news announcement, we then get it, there's a massive gap down which spikes back, it pushes back up, and it just becomes chaotic. And when you look at that, how could you possibly trade that? So if you were in a trade, for instance, you might have found that gap could have impacted you positively, or more importantly, could have impacted you negatively. So it's just good to add that in as a little bit of an awareness thing. When you're swing trading, the news announcements have less likelihood of having a big impact on your trading over the long run, whereas if you're day trading, it will obviously have or more likely to have an impact on your trading, and it's definitely worth paying attention to. Okay, so I hope that's useful. Now, on to the next one. Now, Aussie versus American dollar. This one is really interesting. We had been watching this one, as I say, I have been covering it, because what we were looking at was potentially price pulling back with the opportunity to then go long. Now what you'll notice is it hadn't quite reached the next level down when it did this initial move, and we hadn't quite reached the 21 moving average. But now what's happened, you'll notice, is on Friday we've had an absolute corker of a reversal candle. This is an absolute beautiful reversal candle. You'll also notice it's now come into this trend line. So for me, I would be looking to potentially consider a long trade on Aussie dollar, and as you can see, it's getting to a position that either you could consider taking a break of that reversal candle, or let it maybe just come back above this level and get in there. And that's where you can maybe use a lower time frame to look at timing and see if that works out, because the only slight issue is the fact it has come further down than these levels here. So whether or not it proves itself, and again, because of the news on Friday, that might just be a little bit of a flush out, but if we do start to push up, it's certainly looking quite good for some further upside. So I would be looking at that and watching that right now. Even if you don't trade pullbacks, just from a learning experience, it's massively important to do, so you can see how price works, how it moves, the importance of candles, the fact we've got the trend line, the momentum in the market, and the different components. Okay, so I'll be watching that. Now, we go into the Dow. The question is, if you're not aware, there is a saying in the markets that you get the sell-off in May. People go away in May and it creates the sell-off. The question is that sell-off beginning? We're just coming in. I'm doing this video on the 4th of May. So we're coming into the start of May. We have come back to this level here. The interesting thing will be whether or not we see this sell-off. It's quite a historical thing, but like anything in trading, it's not guaranteed. Now, when I look at this technically, I do have a little bit more of a bullish bias, and the reason being is, in some respects, a little bit similar to cable. We came up, pushed down, and came back up again. Since then, we've come back down, we've pushed up, we've come down again, and we've pushed up again. So what I'm actually going to consider, so you can see we've got a little bit of an ascending triangle going on. If the market doesn't roll over, if it doesn't sell off and pauses here, I will consider a long on a break of these levels here, and I would really want this high taken out. So I would be looking for that. However, if it rolls over, then that's fine. It's not presented itself for the long, and I will then look to see where we could short. Now, because we've come up to this level again, you could straight away again, you could look at the short here, so that would certainly be an opportunity. If you wanted to be a little more conservative, you could maybe wait till it got here and look for a break of this area down, and then if you want to be even more conservative, if we reach 16,000 again, then a potential break of there. So there's definitely a few steps that you could look at trades on the Dow, and we've got both the opportunity to look long and short, so it's quite an exciting market as far as potentials go for this coming month. Now, just to finish off this month's commentary, we'll have a little look at the FTSE. I tend to focus more on the Dow or the American market because it has such a heavy weighting on the overall markets, and I just made that decision. But the FTSE certainly does offer at times some really lovely opportunities. Now, quite similar to what we've had in the Dow, the only difference with the FTSE is it's not quite made the highs. It has come back to this level here that we've got that indecision with, but it's not quite made it back to these highs. So again, a bit like the Dow, the question is, can we reach these levels, and if so, do we break them? Alternatively, do we start to see some form of a sell-off? We've got the first level, which would be down to this area here, which would be about 6,650 approximately. Then from there we've got 6.5. Only slight difficulty we have is once we hit 6.5, we start to get into a little bit of traffic, which could make it a little more volatile overall. But similar to the Dow, it's certainly in a good area and would be worth watching for potential opportunities. So that's us for this month's commentary, and I look forward to seeing you in the next one. Bye for now.